Where do you see the oil industry going within the next 12 months?
That's a tricky question. If we have some kind of intervention from OPEC, then we might see the price creep up to $60. If there's no intervention from OPEC, there's nothing to really prevent the oil price sliding all the way down to $45 or even $40, which would be an optimum price for a number of shale producers. Not that they'd be happy, they'd rather like it to be higher, so would OPEC. Now, I would say over the next 12 months, depending on what sort of interventions we have, artificial or otherwise, we could probably be stuck in the $40 to $60 range. There are some huge caveats there. We've discussed oil demand. If the market starts believing that Chinese demand is on the decline, then the market would sort of mark down. They'll start shorting the oil price, i.e. betting on the oil price falling. Right now, the empirical and anecdotal evidence that is out there is that the Chinese are not importing like they used to. We're not back to 2012, 2013, but they're certainly in the game because they're trying to build their strategic petroleum reserves. They're about halfway to their target. There's still another 200 million barrels, I think, in my opinion, that the Chinese would want to add to their US-style strategic petroleum reserve. As long as that is there, the Chinese would keep turning to the global markets and importing more. And that would support the market. So that's your demand side. We would, I would like to think that India would also work towards the demand side. But on the other hand, we have Japan and South Korea, where Japan's imports are down to they're lowest since the early 1980s. In South Korea's case, they had a $10 billion economic stimulus. They had some problems of their own, not least with Samsung being such a big company and having a headline impact on corporate psyche. So I don't see demand in Japan and South Korea firing up, but India could fire up, China could hold its own. So that's your demand side. On the supply side, I would say regardless of what OPEC does, not just in the coming months, but over the next 12 months, whatever OPEC does, there will be some US shale players out there. There'll be some, Canadian explorers out there who can make it work at even $30. So as long as it's above $25 to $30, these guys will keep going. There was an attempt in June 2014 and ever since by OPEC to keep their taps open to somehow price these guys at the market. And it did cause a lot of distress. A lot of companies in the US did go bankrupt. Like I said, at least 1 million barrels per day of US production is out of the market. But nonetheless, in this current price range, I don't think OPEC has the capacity to knock these guys out. So the way I see it in the next 12 months, we will still have more barrels than we need.
Has the oil price slump boosted the economy globally, and in what ways?
By some measures, most definitely. I would say if you take the whole global economy on an even keel, you'll probably see at least 1% to headline GDP added over a period of 2 to 3 years. But there is a big caveat, is that some of the biggest economies are heavily oil reliant in terms of their oil exports. So if you look within the G20, the Saudis are now in the G20, and you look at all the GCC, the Gulf Cooperation Council economies, they're major economies, and they're heavily reliant on commodities exports, especially oil. If you look at Latin America, you look at Colombia, you look at Chile, you look at Argentina, which is starting to try to have their own shale drive. A lot of these economies are reliant on commodities exports. So lower oil prices, lower commodity prices by default are it's bad news for these guys. So it works both ways. There are some economic advantages, but there'll also be a few disappointed folks out there.